Good morning, everybody. It is Monday, June 9th, and we're going to start our prep for today. Before we do get started, first, just a quick reminder that derivatives trading is inherently risky and past performance is not indicative of future returns. Now, we'll start with recapping Friday and the easiest money that was out there. We laid this out in the morning on our professional room. It's 7:54 in the morning, and we gave you the trades that we would consider. The only ones that ended up showing up were on the NASDAQ. That was the long around 785, where we got up to 873. So it was within the acceptable range of cutting the trade, which would have been at 873. We usually use about 20 points or so on the NQ, given that it's usually a thinner instrument. Then we had the short from that level all the way back down to 785 and 733. Again, missing low of day by about 11 points. But again, these are the easiest 120 point trades. So on a micro, that's a couple $100. On a mini, that's a couple $1,000. And we put that out again at 754. So we're trying to give you the easy money trades. Friday was very slow, but there was still plenty to be made. Now, to get started on today, we'll start off as we have new data this week for our COT reports. Commercials did sell some of their product, so we are still in distribution mode. They still have 8,700 contracts to sell at higher prices. RTY, we saw a large addition last week. That was a big surprise on the upside here. Or not surprised, but just a big change, 39% compared to their week over week max. So that is a very large change. We don't look to get surprised or anticipate anything. We just look for the positioning. And this was a large change on the Russell. So that signals again, traders, commercials are getting long, but we are still below our triggering. We don't have a red or green in this box. So we're not looking for immediate trades on these signals. We're waiting for the signal to set up to tell us it's time to use this information. Which it's telling us on Bitcoin to look for a new all-time high push as commercials are at their longest position ever. At this point, Bitcoin is still newer in the futures instruments, and this is the longest position we've had since those have become available. So this is in the past 3 years. We are seeing a large long position, which will signal we have room to go for distribution. That's how they'll make their money. And again, the VIX traders are still long, commercials are, but they did sell a portion of that position, and we're not near triggering levels here. So that's going to be one we want to pay attention to if it does get to triggering levels or when it does, as these always do over different durations. On to high yield, we're still below our 3.5, so we'll watch if it gets close. Otherwise, we are getting complacency and no signs of recessionary risks at this moment. Onto the move index and bond volatility. So we have max complacency taking hold right ahead of month end, OPEX, and FOMC and CPI. So nobody wants to do anything, and this is setting up as a ball underwater situation, which we've seen on the VIX in the past. You'd have to go back to some of our videos from December of 2023 and 2024, where we explained what happens in that environment. Potential catalyst that could shift this from complacency back up to the 110 and then possibly a breakout would be CPI, PPI, or FOMC in the next week. But again, with those business cycles ending, that's probably not as likely. There is a lot of money that traders will want to paint the books with because that's what their bonuses and their paychecks are based on. So we always want to follow the flows, follow the actual money in the market, and follow the business cycles the same way that you would if you had your own small business. You would want to make sure that your numbers look good if you're going to the bank for any kind of loan or anything, any kind of financing, or for companies when they do their earnings reports. They really make sure to get those books nice and tidy, and that's what we're looking for here. So on the bond volatility, we could see the move get down to about 85.5, and that would likely start a top forming in the ES. And then again, what do we have after the business cycles end, after OPEX, after month end, after FOMC? We have the July 9th tariff deadline. So that and the lawsuits could push volatility back up after the quarter closes. Again, you'll have all the companies that will have their quarters closing for their earnings reports as well. So everyone will want to get their bonuses before we see anything major change here. On to cross asset vol. We gave you several levels on the VIX to watch under 18. We said if we stayed under there, start looking for long. That's what happened. 1637 is now our low end of the level. Uh, we could see down to 15. 15 puts us back in extreme upside potential on the ES, but also extreme complacency. And so we look for much smaller ranges if we get under 15. And that's what we'll be watching. If we get over 18, then we would watch for downside to start taking hold on the ES and move back up to 20. Other volatility, if we look across the board, you can see it's all coming down. There is less. Now, oil should start to see a breakout in vol as we are seeing it push back up to 65. And that will also directly affect inflation. Don't forget, guys, because that is a key factor in the CPI report. And so inflation ticking up will lower rate cut expectations, and then we'll have POTUS pounding the table again that things need to change and the Fed is too late. And if we get over 65 on oil and that starts really breaking out, then as we've been saying for the last couple of weeks, that inflation is done with its down ticking, and we'll start seeing it tick back up. We are in a stagflationary environment. This will bleed into July's deflationary period. So that's what we're watching here. But again, everything is still saying more upside as it's coming down. So on to our calendar here for our catalysts and insurance. We do have CPI and PPI this week, so we would look for these to get up to the red zone, which tells us there will be some insurance buying ahead, but those likely won't begin to start triggering until Tuesday afternoon ahead of CPI. Maybe in the morning on Tuesday, but really we won't see the big money coming in until Tuesday afternoon. And that's when our washing machine will come back. Now, we could have some catalysts added to the calendar. We'll keep an eye out for anything that the White House or um, anything from China that is coming across that could signal a press conference or anything that traders would be able to prepare for and buy insurance. Remember, the risk comes in the market when a storm approaches that you can't prepare for. We know that a washing machine comes and this constant up and down that the insurance providers play when we have known catalysts. So we'll be watching for that this week in the second half. We'll also be checking the calendar for daily editions. And otherwise, you can go back to the last couple of weeks for how this insurance has played out. And then this will bleed through into next week as well, as we have FOMC and OPEX on Friday. And next Thursday, the market is closed, don't forget. Now on to our systematics and algorithmic based strategies. Again, they're not likely to be returning until July, but ahead of PPI, we will be running out of room to the downside. So when this red line gets down to this lower line here, you can see that's usually when we find a top in the market. Now we're still looking at this as 2022. So as the green line starts to come down and our longer term move starts coming down, then if the short term starts moving up, that becomes very risky. And that's when we can get that next leg lower, which again, looking at the way the flows are and the timing, that is not likely until July. But that is what we are watching as the deflationary pressures return and after FOMC and CPI and all these major catalysts that are sitting on deck over the next coming days. So now with that, we did post our levels in our room as well as our trades. We'll just go over a few of those key levels for you. And that is going to be on the ES. We are looking for rotational price action today as long as we stay between 59.65 and 60.25. That's going to be our rotational zone with our pivot at 59.95. Again, if you guys have access to our website, all of my levels are in there. If you are a part of our professional Discord, I have posted all of the trades. So I'm just going to go with rotational levels here today. We have NASDAQ 21,613 to 21,878 with our pivot at 21,745. Onto oil, 63.60 to 64.95 with our pivot at 64.28, and gold 33.28.1 to 33.81 with our pivot at 33.54 half. Remember, guys, control your risk. That is the most important thing. We always need to be preparing for risk in the markets. And if you have any questions on our trades or anything in our room, please let us know. Otherwise, back again tomorrow, and have a great day trading.